Tom Boley, Chief Market Strategist here at Earnings Beats. Hey, good morning, everybody, and welcome to this Thursday, March 28th, 2024 edition of Trading Places Live at earningsbeats.com. I'm Tom Boley, Chief Market Strategist here at Earnings Beats, and I'll be your host for the next 30 minutes or so as we take a look at the action from yesterday and what we might expect as we close out this holiday shortened week. Of course, tomorrow is Good Friday, so all markets are closed, bond market, stock market, etc. It's a federal holiday. So enjoy the long weekend, and we'll be back at it on Monday again to see what April brings. Hard to believe, but this is the end of March. Today's the last trading day of March. It's been a pretty decent month considering how overbought we were going into the month. And then a lot of the obstacles that we faced, especially options expiration, where we had so many in the money calls, really, any kind of weakness there was somewhat limited. Damage wasn't too great. The markets responded from that. Rotation continues. It's turned out now that we're at the end of the month, it's turned out to be a pretty good month for small caps in terms of rotation. And finally, getting a big breakout on Wednesday. And we're going to talk about that here in just a minute. But let's go ahead, take a look at the action from Wednesday, and let's see where we are. Dow Jones Industrial Average up 477 points, back to 39,760, on the cusp of a new all-time high, and of course, not too far from a very important psychological 40,000 level. 40,000. We've never seen it before, and it is literally on our doorstep now, less than 1% away. Will we close out March with a new record? We got the Dow futures up slightly. All the futures are kind of near the center line. I think small caps are up about 0.2%. So we're getting additional leadership in pre-market action there. We'll see how things open and, of course, take it from there. S&P 500 up 45 points, 52.48. Not too far from 5,300 as we just kind of keep taking out these levels on the S&P as it makes one all-time high after another. Nasdaq 100 up 70. That's up 0.4% yesterday, getting back close to recent highs. There's definitely been a shift, though. I mean, I can feel it. I think probably just about everyone else can feel it. Those large cap tech names not quite doing what they were doing before. In fact, I looked at 10 of I think they were the 10 most heavily represented stocks in the Nasdaq 100. And when I look at them, I would say 5 are somewhat bullish and 5 are somewhat more neutral or even short-term bearish. So we don't have that full participation from those magnificent 7 stocks right now. And yet the market keeps going higher. So everyone arguing that the magnificent 7 is where we were getting all of our strength. It's fine. It's time to find a new argument. That one's old now. It's getting stale. Mid cap, small caps continue to roll. Look at the mid cap chart, setting a new high yesterday, closing at 3,034. That was up almost 49 points, 1.64%. Again, look at that relative to the other indices. Mid caps certainly leading those. And then the biggest winner of all yesterday, small caps. The IWM jumping $4.47, closing at 209.64. This is the highest close we've seen in quite some time. Now we're probably going to be looking at that 225 area, which I think we're going to hit in time. That's just an initial target, in my opinion. But that's still 16 points away, which is about 8%. But that would be the next target after yesterday's breakout. Prior to yesterday, the highest candle body we had seen in recent memory on the IWM was 208.21. And not only did we get through that, but I want you to see how the IWM ended yesterday with a bang. I mean, we were kind of hovering a little bit above that 208.21 level. Which way were we going to go? We've had failures up there. Well, we got our answer. IWM absolutely flew into the close. Really nice move. Big volume coming in on the last tick. A lot of folks, I think, wanting to participate in this breakout. So all in all, pretty good day yesterday. I mean, again, it wasn't, we didn't see the Nasdaq and some of those magnificent 7 stocks doing what we have come to expect over the last couple of years. But when they falter, what's going on? Money's not leaving the market. The money is rotating into other areas, which is making this more of a wide participation move, which is critical to a sustained secular bull market advance. So good news pretty much all the way around as far as I'm concerned, because I actually think those Nasdaq 100 stocks probably do need a little bit more of a rest. We got another earnings season coming up here starting in a few weeks, and I think we'll see more and more movement back into some of those stocks as they approach their earnings reports, and assuming they deliver the goods again. And they've been pretty reliable over the last several quarters. We'll see if they do it again this quarter. But if not, there's a lot of other areas of the market to pick up. Financials doing really well. We've seen industrials performing exceptionally well, and other value-oriented areas, even some of the defensive areas, have performed a little bit better. So it's every area that I look at, for the most part, is in a bull market. Everything's breaking out or close to breaking out, trending higher. Very, very few areas of the market are holding the market back. And as I said, that type of an environment is really, really good for U.S. equities. So I'm seeing just green light ahead. I see the market continuing to push higher. It's not going to be a straight up move, even though that's pretty much what we've enjoyed since the end of October. I do think we'll probably see some pullbacks along the way. I don't expect anything major. When I say major, I'd say maybe more than 5%. I don't see anything on the horizon until maybe late summer. I just think we'll continue to meander up. We'll pull back a little bit. I don't think the gains are going to go straight up like we saw October into January. I think it'll probably be a little bit more of what we've seen recently, where it seems like it's a labored attempt to go higher, but it's really not. The market just continually goes up. Volatility remains low. All of that combined suggests to me that we're going higher. So anyway, let's go back to that main chart though, because I want to show you the sectors. So yesterday's leadership: utilities, real estate, and industrials. That's kind of interesting, right? In the daily market report that I sent out to our members yesterday, I kind of broke down. It was a special report. I broke down the IWM just to give everyone a little bit more of a feel of what really drives the IWM. The number one industry group in the IWM is the industrials. So industrials being up 1.6%, that helps. I've talked in the past that a lot of times the IWM, the small caps, and the transportation area tend to move hand in hand because both benefit from a strengthening domestic economy. So when I look at the transport yesterday, rather than go back through the moving averages, and I'll show you a better chart in just a little bit, but rather than going back through the moving averages to the downside, we actually turned back up above the moving averages. And that was something I said to watch for. We want, if you're thinking that the transports now are starting to make a move, when you pull back, you want to hold the moving averages. Then you want to make a breakout. So again, we'll look at this chart in just a minute in a little bit more detail. Moving on to the industry groups, renewable energy. There was a lot of groups that did really well yesterday. Renewable energy was one. This is a group that really doesn't do all that well in April. And we haven't taken out major resistance levels. So I'm not sure that we're out of the woods just yet, but we did see some breakouts in the group. And you can see renewable energy closed at the highest level it's seen since probably the first week of January. So renewable energy picking up for sure, but can we take out those key levels to the upside? You can see that the PPO just continues to kind of meander around that center line, the zero line, which is telling us there's just not really any sustained momentum in that area. So yeah, we get some up, then we get some down. Do we trend? That's what we need to look for in any of these areas that are not really participating. We want to see them begin to trend, which means hold your moving averages to the downside, set new highs to the upside. Anything other than that, and we're probably just going to continue this meandering back and forth. Aluminum, big day yesterday, up 5%, getting back close to the high at the end of December. But this is the highest level in 2024. Nice breakout yesterday to set that new 2024 high. Can we get up through the 120 level, 119, 120? That remains to be seen. But we have seen that 20-day moving average in very bullish fashion move through the 50. So we got that golden cross, and we're trading up, setting a new high for 2024 above the 20, which is now above the 50, which in turn is starting to turn up. That's another key sign, is you want all your moving averages to be moving higher. That is definitely a key sign of some increasing bullish momentum. So aluminum kind of taking that move to the upside. And again, this has been one of those areas of the market that hadn't been doing very well. AD line moving to a new high, approaching a new 6-month high, not too much further to go. So overall, pretty good action there. Finally, the durable household goods or durable household products area, been downtrending, but again, another group that is turning up. What are we doing? We're holding that rising 20-day moving average, which has now gotten that golden cross above the 50. Still waiting for the 50 to turn up. So this is still an early move, but certainly looking much more bullish than it has in a while. Does have overhead resistance between 150, 155. So we'll see if we can get through that. But this is another one of those groups that's looking bullish. And as more and more of these groups turn bullish, where do you go if you're a bear? What do you short? If everything looks good technically, where are you putting your money on the short side? Or are you getting squeezed out? I think probably a lot are. Anyway, pretty good action though yesterday. Widely diversified. It wasn't being led by, just that tight group of Nasdaq 100 stocks. This is a full-fledged bull market with more and more and more areas participating. 10-year Treasury yield. So economically, the GDP for Q4 came out. This is the final reading for Q4. So next month, we'll get our first reading. It'll be the end of April. We'll get our first reading of Q1, which will be widely anticipated. But once you get past the first one, it's just usually minor revisions. The quarter over quarter annual rate of GDP for Q4 actually ticked up from the last reading. That was at 3.2%, the last reading. The final reading just came in this morning, 3.4%. So we did see a better than expected move there. We saw the PCE, though, the personal consumption expenditures, the annual rate actually jumped from 3% to 3.3%. So we got a little bit of a positive, a little bit of a negative. Overall, market just kind of taking it in stride. At least it was as of 5-10 minutes ago. And we'll check the market at the end of the show. But right now, like I said, market seems to be pretty good. Other economic reports, we got the initial jobless claims, of course, out every Thursday. And that showed 210,000 claims versus the 213,000 that was expected. So it was about 3,000 below, which is good. But last month was revised 2,000, or last week was revised 2,000 higher from 210 to 212. So really, again, pretty much just a wash in that report. We got Chicago PMI and consumer sentiment and pending home sales all coming out later this morning. All right, let's move on to the S&P 500. Let's talk about stocks. What happened yesterday? Well, we closed on the high. So all the volume got added to the AD line. So we're starting to see the AD line turn back up again. That's a good sign. Really, not much more to add. I mean, we're up near a new candle body all-time high on the S&P 500. Not quite there. We're not quite to that intraday, which was set a week ago, and it was at 52.6110. We closed yesterday 52.4849. So we're 13 points away on the S&P 500 from setting another all-time high. The Nasdaq 100, you see a week ago we did gap up, take out the recent highs, but we pulled back, kind of holding gap support, holding the rising 20-day moving average. We did come back up off of the intraday lows. If we pull up the intraday low here, you can see we were down near the low of the day until the last 40 minutes. And then just like the IWM, big move into the close on the QQQ. So not surprising. Afternoon is where we generally would expect strength. If we can get a big breakout, I think we'll see much, much more of that, where maybe we're challenged in the morning and we come back and close at or near highs in the afternoon. That's typical of a secular bull market rally. But we still have some work to do on that NASDAQ 100 before we get to those all-time highs. IWM, so this was the big one for a couple of different reasons. Number one, it's been the lagging industry or lagging index since, probably the last couple of years. And it just hasn't really participated much. And I think part of that is because of those interest rates. I mean, when rates are going up and you've got the inverted yield curve, it is definitely going to impact some of these smaller companies that rely more on borrowing. I mean, when you look at Apple, you look at Microsoft, NVIDIA, they don't borrow money. they're cash cows. So rates rising really have very little impact as long as there's consumer demand. Here with the small caps, it's a little bit tougher. They've got strong competition, obviously, with these behemoth companies. But when rates are going up, many of these small companies do rely on borrowing. And the small banks, which really, in my opinion, are what it really fuels this country. You got small banks everywhere across the country, and they've been struggling. They've been struggling with the higher interest rates, making it tough on some of their customers. And then the borrowing costs that they have been through the roof with the Fed funds rate up. So I've said before, I think as the Fed funds rate comes down later this year, and even I think right now the market's simply anticipating it. The market doesn't wait for an interest rate decline. The market begins to anticipate it. If you look at a lot of the financials, the banks, they are already starting to show some really nice relative strength. And we're probably months away from our first rate cut. I still think it probably at the earliest, it might be June. But it could go even maybe another month or two past that. I think it just depends a little bit on some of these inflation readings and the annual rate of inflation continuing to move lower. At least that's what the latest out of the Chief Powell. That's what he's talked about. So got to take him at his word, I guess, even though that hasn't worked out too well. Anyway, no, but the IWM made a big breakout, and regardless of what you think fundamentally, technically it made a breakout. So you need to recognize price action is starting to strengthen in this area of the market. The volume picked up much more than it had been the prior two sessions on this breakout. And as I showed you earlier, it was really the last 40 minutes where the market made a statement. And we flew into the close to make this breakout. So I think the IWM looks really good here. We had this longer term cup handle breakout, and then we had a shorter term cup handle breakout. So I'm seeing a couple of bullish patterns within one another, making breakouts. Again, I think that 225 level is likely to come into play. So if we look at the IWM on a 5-year chart, what I see is a big move up. And I don't like to see a cup take this long. The cup shouldn't be, longer in duration than the actual uptrend itself. So I don't even know if I'd pay attention to this being a cup. It's really kind of a weird one. But what I would pay attention to on this weekly chart is the fact that prices continue to move up on the weekly chart. They're trending up. They're not nearly, look down here at the RSI on the weekly basis, 66. That's where we're sitting right now. All the other major indices are over 70. I think they're all over 70. Some, quite a bit over 70. We're not overbought in this area. So a lot of times that's why the money rotates over, because this area of the market hasn't made its big move. And if we're in a secular bull market, you see rotation, bullish rotation. Sometimes you get the QQQ leading. Other times the Dow will be leading. Sometimes it's small caps. Well, small caps haven't had their turn in a while. So I'm sure they're pretty anxious. And with yesterday's breakout, that could signal much, much more strength ahead. So really love the action that's taken place there. Transports, as I mentioned, get up to 16.2, we reverse. When we were down at 15.4, we reverse. And when you get these reversing candles at key support and resistance levels, you have to respect them until we get the breakout. And remember that these reversing candles tend to only signal us for one day. If you've got a reversing candle and you go back up and you just set a new high from this day, technically the candle worked, because it's not a 3-day signal. It's not a 2-week signal. It's not a 6-month signal. Certainly not a 20-year signal. It's just a reversing candle for a day. Gives you a little bit of an idea of maybe what market makers are doing, which I think can help short-term traders. But literally, if you just go up for a day or even make a new high from the reversing candle, technically it's done what it needed to do. Now, when candles get more enticing is when they combine with other corroborating technical evidence of a potential bottom or a top. So when you're hitting a support level and you make a reversing candle, to me, that gives you a little bit more of an idea that probably we're bouncing off of this support area. Same goes to the upside. We went right up to 16.2, right to gap resistance, and then reversed. Black candle off of an uptrend. That's a reversing candle, and we saw a couple days weakness. Here's the difference so far, and it's just so far. Very, very early to make this call. I want to be clear. But what I'd like so far is that when we went up and we reversed and came back down, we reversed again before we went through the moving averages. You can see these moving averages sitting right on top of one another. If you look at a chart of the transportation index, the 20-day and the 50-day are sitting almost right exactly together. I mean, if I look at the numbers, it's the 50 is at 15,791 and the 20-day is at 15,807. 807 versus 791. They're 16 points apart in a 15,800 index. Well, actually closed yesterday over 16,000. So, I mean, we're talking about, just pennies. Think of it in terms of like pennies. But so there's no real momentum going. You can see that from the PPO. I mean, if you can't see it from the moving averages, which are right on top of one another, you should be able to see it from the PPO, which is sitting right on its zero line. So no momentum. So what do we need to see to actually have momentum going forward? Well, we need to see a pullback that holds the moving averages and then a breakout. So transports this time went down and held the moving averages, at least for a day, and we reversed back to the upside. If you go back and you look at prior history on the transports, here we look good, and then we're right back down. Here we look good, and then we're right back down. Here we were actually trending higher, and then we pulled back and went through that 20. Here, maybe it's just a day. I mean, we got to see follow-up. Like I said, this is very early, but what would really encourage me is to get back up and close above 16.2. We're at 16,028. That's barely over 1 percentage point above where we are right now. So a lot to be thinking about as we go into the last day of March today and into the first week of April. But just remember, if we get a big move here, and I haven't looked to see transports on a seasonality, but let's pull it up. I don't even know. I don't recall about April. Last 20 years, April's average move has been 2%, July 2.9, November 3.6. So actually April is the third best month over the last 20 years for transports in terms of average return each month or in April. The thing that's not so great is it's just a little bit over 50% chance. So it's like almost a coin flip, maybe a little bit better than a coin flip. But overall, pretty nice action. And then if we compare it to the S&P, let's see if that changes things. Certainly does in the short term. Last 20 years basically goes along with the market, minus 0.1% versus the S&P during the month of April over the last 20 years. So I would not say this is the strongest. Clearly the strongest month, in my opinion, is November for transports and really the fourth quarter in general for industrials. But we have strength other times of the year. And transports, again, not really showing anything crazy. It just kind of goes along with the S&P 500. But that's not bad because the S&P 500 tends to be a pretty good, or the April tends to be a pretty good month for the S&P. So all of that just tells me watch that overhead level, 16.2. If transports break out, that's just one more bullish piece of the puzzle fitting into place. I've been talking about this for almost 2 years now. Those of you that have followed me know I turned to bullish middle of June 2022, and I have not relented. I said we were going back to all-time highs. Where are we? We're back to all-time highs. It's hard to see back then, and I get it. Everything was horrible. Every news story you heard was horrible. It was the Great Depression 2.0 coming. I mean, I get it. But you have to use perspective. You have to be able to look at history. History repeats itself so much in the stock market. And it came down to risk. It wasn't so much that I knew the stock market was bottoming, but what I did know is that after we dropped 20%, over 20%, I don't know, maybe we're down 23% or something like that at the time. If you look at history, rarely, in very, very few instances, do you see the market continue to go much, much further down than that. Maybe in my lifetime, 3 times. Mid-70s, the dot-com bubble, and the financial crisis. 3 times. And that's spanning a lot of years. I'm no spring chicken. So it's just about odds and risk. And I don't know, maybe having conviction. But it wasn't just the fact we were down 20 some percent. If you recall back then, I was talking about the manipulation that was taking place and how there were a lot of buyers in the afternoons. Mornings, yes, amateur hour, the gap down, amateur hour, a lot of retail traders panicking because the market was down. I mean, go back and you look at every major bottom in history, and that's what you're going to see. Retail traders throwing in the towel. I can't take it anymore. I'll never touch another stock in my lifetime. It's rigged. When you get to that, to that depth of despair, the market's bottoming. These secular bull markets can go on for many, many years, not months, not 4 months like we're looking at on this latest rally, but for many years. I mean, we could be in this. I think we're going to be in this secular bull market for probably anywhere from 6 to 8, maybe even 10 more years. Think about that for a second. I've said before, when the S&P was back at 3,500, 4,000, I said the S&P within a decade would hit 12,000, more than triple. Then it seemed like, wow, he's lost his mind. But here we are now, 1,500, 1,700 points higher off the low. It doesn't seem quite as crazy because from here to get to 12,000 is just a little bit more than the double in the next 6 to 8 years. And that actually is just like an average return. So anyhow, still got a lot to look forward to in this market. I am long-term bullish. No one has heard me say anything different in the last 2 years. Long-term, I am bullish. If you hear me talk at all about maybe a pullback here or seeing this kind of an overhead area of resistance, blah, 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 it's short-term. It's for short-term traders who may not want to take risk. And so you can, kind of move into some other areas. Anyhow, let's keep moving. For those of you that are new to Earnings Beats, if you like the way we approach the market, I think it's a common sense approach with a lot of perspective, a healthy dose of perspective, throwing in the technical analysis and the fundamentals, intermarket relationships, sentiment, big about sentiment, throw all those things in. You can outperform the S&P 500. You can outperform Wall Street. One advantage that we have as retail traders, smaller traders, it's much easier to get in and out. So if you see the signals, you can get out like that. Wall Street, they need time. You can't unload, millions and millions and millions and millions of shares by putting in a market order at 10:30 in the morning. You got to accumulate or distribute over a long period of time. So if we have one advantage that we can take full advantage of, it's that we can be much more, we can be much quicker in terms of maneuvering in and out of the market, which, hey, that's great. When you see signals, boom, you're out. They're bearish signals. Or you see bullish signals, you're in. We can do it at 10:30 or 2 o'clock in the afternoon. We can literally, like that, online brokerages. Awesome. Anyway, but if you do like Earnings Beats and you like my style, my strategy, whatever, make sure you sign up either for our paid service, 30-day free trial. So you can check us out for 30 days. Absolutely no cost whatsoever. And if you're just learning and you're trying to get, learn more about what we're doing at Earnings Beats and how we approach the market, at a minimum, sign up for our EB Digest. Name and email address comes out. The newsletter comes out Monday, Wednesday, Friday. And when you're thinking newsletter, don't think about this big, long newsletter you're going to have to read. It's going to take 5 hours. It's 2 paragraphs and a chart. That's all it is. So it's very simple, very concise. And over time, I think you'll start to get a flavor of what we do at Earnings Beats, how we approach the market and so forth. So I think that's a great way to begin to learn maybe a different way of looking at the stock market instead of following CNBC, which is literally, I feel like, just dragging you by the nose wherever they want to take you. And then also, a little bit of a shock factor so they can get a lot of clicks, make more money. It's all about the money at CNBC. Anyway, definitely check that out. We've got a big event. This is another reason why you want to be on our EB Digest. We've got a big event coming up Monday. It is a free event. Free, totally free. You don't even have credit, credit card. I'm going to talk about candlesticks on Monday at 4:30. Candlesticks are a very, very big part of my trading. Very big. Can't really imagine trading without them. I've been trading with them for so long. But the visuals that I get from candlesticks, the sense of what market makers are doing, market makers always make money. If you can get on the side of a market maker, you can make a lot of money. And the best way to visualize what market makers are doing is understanding candles and what various candlesticks mean. So I'm going to talk about that Monday at 4:30 p.m. Definitely want to be part of that. If you are a member at Earnings Beats right now, you don't need to register. And if you're an EB Digest member already, free digest member, you don't need to register. But if you're not on either one of those, you need to register. And when you do register, by the way, you'll automatically be added to our EB Digest. We reach out to our EB Digest community. That's our free community. We reach out for every free event. So not only are you getting 3 newsletter articles a week, but you're also getting access to any of the free educational stuff that we do, the events, and we do a number of them throughout the year. So anyhow, make sure you register if you're not already registered in one of those ways I described. All right, so looking at chart of the day, I don't really have one at this point, but what I can say is I'll pull up MKC, which is McCormick. This is a company that kind of changed the look on their chart from just a couple of days ago. They came out with a really strong earnings report, beat on the top line, beat on the bottom line. And after gapping down and trading sideways all of this time, this is a big island cluster right here. After gapping down and then trading sideways for several months, we got a gap up with earnings. And so we're getting like this breakaway gap back to the upside. And that usually signals more bullishness ahead. I would be watching probably 74, 75 as support to the downside. If we go down much below about 73.5, I'd probably be out. It's a defensive stock. Most everybody knows McCormick, the spices. I use McCormick all the time. But anyway, if it goes back down much below, say 73.5, I'd be a little concerned in the near term. But it's a slow mover, and I suspect that we're going to begin slowly moving higher. So MKC looks pretty good to me. All right, we're past 9:30, so let's take a quick look at the market, see what is going on. We got the Dow up 70, which is up about 0.2%. S&P down just slightly, pretty much flat. Nasdaq taking it on the chin again, down about 0.25%. Nasdaq 100 down 0.2%. Small caps, mid caps leading again. More rotation. Just pointing out maybe the not so obvious, because a lot of folks know that small caps haven't performed well for a while. And usually you don't wait, you wait until small caps are up and leading the market to the upside for 6 months. And then you're like, oh, small caps are doing well, I'll jump in. A lot of that legwork, that rotation and all seems to be already taking place. And we'll just kind of monitor to see if we get follow through. But so far today, so good. But that's it for me. Enjoy your Easter holiday weekend. Again, markets closed tomorrow. So no trading, won't be around, no DMR from Earnings Beats. But we will do our regular stuff that we do over the weekend. We'll get out the weekly. Actually, this weekend is seasonality. So we'll have a seasonality report. I'll probably try and get that out today sometime. And, our normal weekend stuff that we get ready for next week, we'll have out to you over the weekend as well. So anyway, have a great weekend, everybody. Again, enjoy Easter weekend and make sure you come in and you follow earningsbeats.com. Ready for the second quarter, and that'll get started on Monday. Have a great weekend, everybody. Happy trading.